Welcome to Dave and Dharm Demystify, a fintech futures podcast, helping make sense of the world of fintech and digital finance. Please sit back and listen as the two Ds take a subject and discuss it to make it clearer and easier to understand.
Demystifying.
Welcome everybody to the Dave and Dharm Demystify show, and this week we're going to demystify quite a well-known fintech, Bud, and to do that is one of the founders, Ed Maslaveckas. Did I say that correctly, Ed?
Yeah, that's it. That's about right. It's as good as I can do it.
Excellent. I mean, Ed, can you give us a bit about your background and then tell us a bit, for those people that don't really know Bud, how it started, etc.?
Sure. It's a long, twisted story, but hopefully try to, as you say, demystify it and kind of make it seem kind of logical in the sense that it's always been somewhat logical in my head and maybe not so logical externally. But yeah, so I'm Ed, one of the co-founders here at Bud. George and I began Bud or started Bud back in 2015. The original idea came up when I was working over at Salesforce 2013-14, and we were working with a number of different fintechs in the UK. Then we were really trying to help those fintechs that we know and love today that are consumer-facing apps understand their customers better, use marketing tools to personalize offers and like personalize those experiences so they could kind of have a more loyal customer base, how to acquire customers, how to manage their digital media channels. And so I started to really think a lot about financial services like product distribution and how that happened. And today it's still very much the same. And in fact, like our first mission to disrupt that, the way that people distribute financial products, we failed at that, but we learned a few lessons on the way. So the first product that we tried to build was really a consumer app that we kind of coined as like a money supermarket for millennials, which we put a PR release out about that. We were building the money supermarket for millennials, and we ended up in the money supermarket head office within like 2 weeks of that, as you can imagine. It was an interesting come to the dean's office and be told off. That was a fun story. We've had a few of those, to be fair. That was the original business. But in doing that, we had some challenges, and really a lot of them relied along the technology. So we were aggregating people's transactional data, giving them a financial management tool so they could help them manage their finances better, and then recommending financial products that are relevant based on their data. And it's a really cool idea. I think still very much is alive in a lot of these sort of financial marketplace apps that we recognize today. But in terms of the vision of what we wanted to do, how we wanted to do it, there were some challenges along the way. One was getting hold of the data that we had to do screen scraping. It was before kind of this open banking PSD2 regulation in UK and Europe. So that was a blocker in terms of, and we can get into that whole thing. And then the second blocker was around actually really building the systems and the technology to understand the customer in real time. It became a very big engineering problem and really a data science problem, which we didn't at the time, as a data science community, have the tools to solve those problems. Fast forward to today, we certainly have advanced to be able to solve two of those problems. And so that's why we're very excited about what's happening. Today, like where Bud is, we help fintechs and banks to understand their customer data, mainly transactional data. We enrich that with a number of data science tools. That enrichment then informs kind of our systems, the who, what, and where of every transaction. So if we see a transaction today, you went to Asda, it was £50, and you do that every other week. We know that's like your weekly shop or something like that. We can kind of start to build a picture of who you are. But also when we see the data that comes through, it's a string of letters and numbers. It's not Asda, £50, this day, this time. The machine has to understand like different jumbled up words and letters to then infer what that means. So that's a big part of what we do, is like inferring what a transaction means. And then we built systems on top to personalize customer experiences and personalize offers and rewards and lending offers and lending criteria for a whole bunch of businesses in the UK. A lot of the fintechs that we know and love, a lot of the banks that we know, we work with. And we've recently just launched in the US probably about 18 months ago. We have customers in Australia and New Zealand. We just got our licenses in Europe. So yeah, it's been an interesting 9 years.
I mean, in terms of the data that's coming back and that enrichment as you describe it, I guess what you're returning is almost your best guess. Like, I mean, I use guess very loosely because I know it's a lot more scientific than that. But are customers then having to kind of enhance that further in order to kind of get value? Or do you think you're almost at the point where you get it right most of the time?
So this was like something that we discovered through building our own product to begin with in the early days. We assumed that like enriching that data was a problem that was probably solved by the market. There's a provider out there that does it pretty well, or that it was probably quite straightforward to do. And what we discovered very quickly was like no one had really solved that problem. And the best people in market were like somewhere between 60 to 80% accuracy on a transaction in terms of the best guess of, is that correct? When we see the transaction, okay, the best guess is that it's Asda in this location, that kind of thing. So that inaccuracy, like while that seems like, okay, maybe 80% is good, the reality is if you want to understand a customer from a digital perspective based on their transactions, 80% is terrible because that's 20% error rate per transaction. And as we know, we have hundreds and hundreds of transactions. And to understand the customer, you need to look at thousands of transactions over many years. And so that really became like the central thesis of like, this is the first thing we need to solve and figure out. And it became this like endless problem that really we only were able to solve very well from 2018 onwards because of the kind of advent of the transformer models, some of the research that was put out by Google in terms of like, which really created the AI revolution today, but allowed us to build some of these first machine learning models. So I guess like today, in terms of like your question, accuracy wise, like we're between the high and mid 90s, depending on subjectivity of saying, yes, we are correct when we guess what the transaction is for, where it is and what it means. And that allows us to build much more accurate systems on top, where I think that was something that was missing in the market before.
Said you've just moved into the US market. How much do you kind of have to start again? I mean, the only reason I asked that is I was looking at an app in the Middle East a few years back, and there was this question of transactions, labeling transactions, and there was a sudden realization that nobody in the Middle East at all at that stage had any idea what these transactions meant. So as you go from, I guess, the UK, where you've kind of got sort of fairly mature models and a good understanding of it, as you move into the US, how much is kind of repetitive in terms of that?
So we don't lift and shift models to new regions because that creates a whole bunch of issues, which is like you're already setting out some poor bias and you're basically building on rocky foundations. Part of what we built in the years from 2018 to 2020 was our own systems for labeling that data. It's systems, and we have a platform internally that does it. We bring in labelers. We have a whole labeling process that trains the models. We've built our own system to do that. We have built up kind of learnings. We've built up kind of know-how of how to take raw data, label and train a new model very quickly. I mean, we do retrainings and remodels in the UK all the time just to ensure like better and better accuracy. So when we move to a new market, it's like a complete new build. We've seen other companies that have built transaction enrichment systems, like say that started in the US or other places, and then moved to other countries and just been awful because they're using their same models. So because this is what we do, and we believe we're the best in the world at it, and that is the foundation of the business, when we go to new markets, retrain. But because of the systems that we've built and the platform we've invested in over time, because we sort of foresaw that, yes, we'll need to retrain a lot if we will really want to be good at this. It takes us about 8 weeks to train in a new market. New language isn't difficult. That is very straightforward in that the system that is understanding the transactions, it's a language model. It's not a large language model like you see from OpenAI and others. It's a sort of a smaller language model which understands less about the world because it only needs to understand certain things to do the job. And that way it's more performant. So yeah, we take in local data. It's about 8 weeks for a new market.
When it comes to the US though, because they had Yodlee since the late 90s. And since then, they've got a number of players that prior to them getting open banking have been using a screen scraping approach to do aggregation and some of the labeling themselves. How are you finding it in the US? Is it stiff competition? What's the opportunity that you see, given that there are some players there already that are fairly well established?
So I think it comes down to this accuracy thing, and it comes down to productization in two ways. So one is like transaction enrichment as a service is not like a very sexy product. And it's often a product that a lot of people don't know that they need product teams in organizations don't go out to buy transaction enrichment. They go out to buy set of solutions. So they go out to buy a personalization tool, a marketing tool, a lending tool. It just so happens that transaction enrichment needs to empower a lot of that. And so people like Yodlee and others, I think what they've done is they've certainly got into the market. People like MX, there's a few different companies that we compete with in the US. They've done one of two things. So Yodlee is an example. They haven't really productized on top of that transaction enrichment. They've not built the systems that people buy. And then also there's a lot of companies that haven't really spent the time and money to build really good ML models in the transaction enrichment space. And there's multiple reasons for this, right? If you look at a lot of your banking apps today, you're like, why don't they categorize and enrich my data very well? Typically, somebody internally has decided they're going to start that project and they get a handful of people and then they get 2 years in, they haven't delivered anything and they all get fired. And then everyone turns around and go, I'm never going to do that again. No, you see what Steve tried to do. He tried to build this product and it took him 2 years. He never delivered it. He found out all these issues with it and he got fired. And so like, that's the thing that most people in large organizations are avoiding. I mean, it took us like 5 years and the best part of $20 million to just build the thing well. So it's not easy. And so even someone like Yodlee, who was making a lot of money and still does, I think they've just resold the business again to someone else. They focused on data aggregation. That's where they made their money. And no one really decided they were going to invest very deeply on the core enrichment and making it really good at that accuracy level, as I discussed. And then on top of that, they haven't built some of the systems that people buy, like personalization tools or lending tools. They are starting to now, like MX have started to do it. But I think the reality is, we see it in the US, is some of these systems are a little bit too old. They're built on rocky foundations. They're expensive to implement. And so I think a lot of people are being disenfranchised by like what the incumbents that exist in the market. And so that's been, I mean, the US has been fantastic for us for those reasons. We thought it was going to be stiff competition, but a big market. So like, okay, fine. We found there's a lot of unhappy customers that are paying too much for bad service.
I mean, just specifically around the US market, I mean, who are you targeting? Are you going after the community banks or the larger bank? Where's the sweet spot?
So it's interesting for us, like our first ever customer, which was, I'd never advise anyone to do this. Our first ever customer was HSBC and we were a 5-person company. That's why I don't advise people to do it. I mean, it was great because it worked.
I did a very similar thing.
Yeah. It worked out for us, but it took us years to really kind of get enough momentum to be able to service a customer like that. And so that probably slowed us down in some ways, but obviously once we got over it, it was great. So naturally, we've always wanted to sell to big banks because it's like we're used to it. We've got all the policies in place. We know how to deal with procurement and all that kind of stuff. So we've got that muscle. We have been selling into those banks, but as you mentioned, the community bank, the mid-market banking sector in the US is fantastic because in a large bank, there's always a team that says we can build this ourselves. In fact, we have 3 projects working on this. Well, let's go out to 50 vendors and that takes forever. But the mid-market, they understand 2 things when it comes to technology. 1, they ain't building it themselves. They don't have the people. They don't want to compete on that level. And 2, they need to compete with the big banks. And to do that, they need to find an edge. And so they've been a really great customer base for us. So we've made a lot of traction in that space. And then a few of the fintechs, some of the platforms, some of the aggregators here have announced that we're working with them. One that's public is Akoya, as an example, that works with a lot of the big banks. So we've got a good partnership there, and we've got a good we've got good channels into the larger banks. So most of our go-to-market is focused on mid-market, and then the odd large bank, we have a sales rep going after and relationship building, and we're in like 2 or 3 year sales process with those type of people.
That's interesting. Switching gears slightly and then coming back to the customer experience. So based on what you've seen and experienced over the years, how much do people actually want this? So we all assume that people want kind of analysis on their banking data and help and support. Is that held up by the evidence that you've kind of seen?
Yeah, so I guess there's a couple of different things, right? There's like the customer, like what are the customer outcomes that are important?
Yeah, I think it is. I think the banks have been very slow to add value to their customers, and I think they've got rich levels of data. But I'll give you an example in terms of which is, I guess, at the root of. I was very excited about carbon tracking in banking data, and got very excited about it. Thought, oh, well, this can help save the world, and then realised that people's carbon data doesn't really change. So after seeing it a couple of times, everybody just goes, oh, well, nothing's changing. And,
Yeah.
there's not a massive amount of added value to this. So people stop using it. So I'm just kind of trying to work out or hear from you in your experience what the behavior is that you've sort of seen people show based on the sort of BUD models as you built them out.
So there's a few different things. And like, it's funny you mentioned the carbon tracking thing, because this was something you need the transaction and enrichment to do the carbon tracking. And
Of course.
so we worked on some of that, and we found it was a lot of the banks wanted to do it. People in the banks thought it was cool and it was a great thing to do. But ultimately, like, what was the ROI from the banking side? They've got that project versus 10 other projects. Like, it's this greenwashing, we're all investing in oil, and all sorts of like issues that came up with it. And so, like, in lots of ways, it is very similar to financial management, customer health type propositions that exist. There are some great customer outcomes in, like, when you can get them through for those financial management tools, that you can get them through to the customer. It's a huge benefit. But again, from a banking side, like, what is their ROI? Why would they do it? I think it's very important to us that our banks actually understand why they would buy us. So if you're thinking about transaction enrichment, the first most obvious use case for all banks is disputes. So something that costs banks millions a year, like especially large bank, it costs them tens of millions plus. If people seeing a transaction that's unenriched, it's just like, I don't really understand it. I don't know what that is. I don't think that was me. I'm going to call you up and dispute if this transaction wasn't me. And first of all, that takes a lot of time. It's customer service. But as soon as a customer sees like the who, what, and where of the transaction, they can see they do that transaction every month. It's a monthly subscription for $15.99. And then we've enriched it. We've put a logo next to it. It's your dog food subscription. And so like, okay, fine. I get that. That's me. So that really reduces call volumes. And so in this world of like reducing customer operations and then feeding that information into like AI customer agents as well, being able to have much more informed contextual conversations, those are the big ROI factors. And then the next one from there is personalization. So being able to understand from the bank side, we have this whole tool we call Drive, which is, yes, we're enriching all your customer data in real time. You can show it to customers, reduce disputes, but also now with Drive, you can query all that customer data. You can say like, what credit cards do my customers have? You can have like through a chat interface, you can actually speak to a data analyst model that we've built and say like, can you find me customers relevant to travel credit cards? And because we've enriched all the transactions, it can find how much foreign exchange fees they have, when they've been abroad, how much of their disposable income, well, how much disposable income they have based on their transactions, their incoming and outgoing, and how much they actually travel. Or we can see that in the transaction data. So then they can use that to develop products and then push products with relevant messages to those relevant customers and create those cohorts. And so those are the things that have like a clear ROI. So that's what I talked about, productizing the transaction space. So we've done the transaction data enrichment. Now we have these products on top that like the really show ROI. But just going out and trying to sell transaction enrichment, like as a service, again, it's like Yodleys and other people's who almost give this stuff away because they haven't figured out how to productize, probably somebody knows how to productize it, but they just haven't done it. So I think that's the thing that we sell. The financial management features and the customer tools that we all think and know banks should give their customers, those business cases are harder to solve for, but we do that for a lot of people.
And what about, you have I guess, an advantage with the accuracy of the labeling. Do you create any additional models for, I don't know, like credit scoring or behavioral like information?
We do a whole bunch. So we have like the transaction enrichment layer, then we have the customer insight layer, and the customer insight there then feeds into different products. So we do a huge amount of, as we'd say, I've been in the US too long, so we'd call it cash flow lending over in the UK. So we work with TransUnion as a partner and investor there. And we do a large amount of the open banking lending in the UK. We do the insight to understand kind of the incoming outgoings. We have models that detect whether based off of, as an example, like what we can see in the account, whether we actually think, does it match to what they've declared? And if it doesn't, we can ask them to add other accounts because we're missing certain factors. There's really anything you want to know about the customer, or even anything customer wants to know about their own finances. Like we have a whole set of services that you can query for those. And those are independent models, income models and things like that.
Dharm and I had a fascinating chat with Henk from Open Banking and Charlotte Crosswell as well last week. And they were talking a lot about smart data. And it sounds like where Bud is, you're sort of really at the sort of forward avant-garde position in the smart data market, which makes me think, do you sort of see yourself as a data business going forward? Or you may already see yourself as a data business or a kind of proper fintech?
Much more of a data business. And we have done for a very long time. And open banking is an interesting one, right? Because again, if you think about the history, like what we tried to build, it was really a data product we tried to build from the consumer end. It was a consumer product, but the problem was a data intelligence thing. Like serving open banking, like we serve open banking in the UK, actually a very small part of our business. Most of our business is all on first-party transaction data. In the US, as an example, we work with data aggregators here. We supply our data products to them, and we actually allow people to buy their aggregation through our platform as well. So like in New Zealand, where we do a whole bunch of lending with ANZ, and those affordability models that sit on top of the data, we use a local aggregator there to pull the data in. And so we've, I think, always been seen as an open banking business. But if you like look under the hood and like what people were doing, we've had a very heavily invested data science team and AI development team since 2017. And the open banking thing, it was a question, right? That was a question, a kind of theoretical question as open banking rolled around 2016, whether we would be a data business or a payments business. And if you look at a lot of the aggregators, they really are payments businesses. That's their focus. Ours was always data. And that was through our investment. We didn't do the open banking payments for a number of years because we want to focus on data, but the RFPs that were coming through, they needed you to check that box. So we decided we had to check that box too. And if you look at where we're investing today in the future, we haven't announced it yet, but we're not only have we got like that drive tool, which is essentially an automated data analyst. We're actually building agents in the sense of not customer facing agents, like agentic models that are able to do things for the customer, like open accounts, move money around for the customer. We're actually currently building those today and testing them. And we'll soon be announcing we've made some real breakthroughs in that space in terms of like a model that actually understands somebody's finances and is able to make a plan and then is able to actually go out and do things for the customer on their behalf.
That's interesting. So when can we look forward to that?
We should be announcing that kind of the end of next month. So that's the sneak peek. Obviously, the AI world will care when we put the paper out about how we've made it work and how it works and to validate that. And so that will probably be somewhere around that time. We obviously have been spending almost a year on that and a lot of time and money. And so we want to get a head start and get that to market before we let people know how we did it.
I mean, I guess, is that taking you back to your original, like an app for millennials? I mean, it sort of feels like you've gone full circle. But I mean, I can see exactly why you would do it because now the tools, the data are kind of there.
It is full circle. And hopefully it's validated in some way. The business for us is different in that like we're not going to be serving customers directly as much as like I keep looking at all the tools we had and like we could just ship an amazing product today. I probably say that to my co-founder about twice a week and he gets annoyed. But where I think this agentic world is going is if we can build tools that can do things for customers' finances, we can also create tools and agentic models that can do things inside the bank. And so I think it's both ways. And that's where we're trying to build. Doing something with the customer's money is just much easier to test, moving our money around my accounts and automating that for myself and people in the business today where we're testing that stuff. That's much easier to do than going into a bank and going, okay, I'm going to replace your function with an agent today.
Have you done any tests already with customers, like end customers?
We haven't done any with non-internal people. The nice thing about building these agents is what you do is you have like a data scenario. The data scenario is my finances, my accounts. It understands the world of financial products that exist out there. Not the full world today, because it's like too much for this like testing process we have. But it understands like the idea of financial products like interest-bearing accounts and like different things that they could do. And then we go, okay, run the model and do all the things you're going to do and let's see what the outcome is. Like it's simulating over, let's say the outcome is it moves money from A to B and then a week later it moves money from B to A. And that like, let's say that runs over a time series of a year, 2 years and has the outcome. Well, we can just do that hundreds and thousands of times and it learns and gets better over time. The only like restraint really is like just making sure that the world which we're describing to the model is accurate enough for it to reflect the real world. But the nice thing is we have a whole bunch of real world data for the last few years. So we can test it in real time. But of course, once we get it to market, there's legal and regulatory issues that we need to overcome. So,
yeah, I mean, all of that really is really interesting because I guess it's almost taken for granted that you can train the model and you're going to do a good job of it. But it's whether the consumer's ready for it, whether the regulators are ready for it, and whether the banks almost will take the risk with it.
Exactly. Luckily, we have these like little crazy companies called fintechs, and they will try just about anything as long as you've put the right guardrails in place. Yeah, I mean, again, this is what I keep telling my co-founders. A good reason we could launch our own product and test it in market. Why don't we do that? But
I think he's very wise, to be honest with you. So,
he's wise. He is wise.
Yeah, I get it. Look, it's been a fabulous conversation. Unfortunately, we're sort of out of time. Final question is, moving across the Atlantic, how's the experience been? I mean, it's often fraught with difficulties when UK companies move into the US, because I think everyone assumes it's the land of milk and honey. And
yeah, I mean, there's certainly honey, that's for sure. I need to be very careful with how much I eat. But it's been interesting. Like luckily, so I have a confession. I actually grew up in the US. I lived here till I was 12. And so like half my siblings were born here. So I have an affinity with the Americans. And I think we understood the culture going in was the reality is us being a sort of like moderately successful UK business doesn't mean anything. We're just a startup that started yesterday in the US. And so it was very much 0 to 1. And we treated it that way. And I think even though I knew it was 0 to 1, like going to conferences, I did like 183 days in hotels here last year, just conferences, meeting people. Even knowing that, it was quite galling being like, here's the company, here's who we are, you don't know who we are, and you don't care. And so like that was very difficult, even though we knew it was going to be difficult. But I think doing that is the right way to do it. You've got to be in it. You've got to do the blood, sweat, and tears to get your first US customers, because they didn't care that we worked with HSBC. In fact, they don't know who HSBC is, most of them. Well, in the financial space, a few of them did, but it didn't matter to them. Certainly the mid-sized banks, they're like, who do you work with here in our space? That's our size. And it's like, no one. And that was the big blocker. We've got over that by just getting some small fintechs, getting like somebody excited in a bank somewhere, and then bring us into a project. So we got there, but it was definitely hard. And it definitely takes a long time, best part of 18 months to get the first couple of customers in.
Fantastic. Well, listen, thank you so much for joining us. It's been a really interesting conversation. I like the word agentic as well. So I feel like I should have heard that before, but I think it's one of those ones we're going to hear very often. Good luck launching your agentic propositions. So.
Yeah, I'm actually really hoping to be using that very soon, because it's definitely the way forward, I think. So well done for getting there first.
Yeah, if you need a couple of beta customers.
Yeah, absolutely.
We're here.
Be careful what you wish for. Yeah, no, happy to. And I hate financial admin, so hopefully it can solve that problem for me.
Very good. Thank you so much.
Take care. Thank you for having me.
Thank you for tuning in to Dave and Dharm Demystify. We hope you enjoyed the show. Don't forget to like and subscribe, and tune in next time as we take another topic and demystify it.